Oh, welcome to our monthly Financial Empowerment Roundtables. Um, we are excited that you are here. Uh, I bring you greetings this month from the beautiful sunny state of Charlotte, North Carolina, where Lauren and I will be attending the Power Networking Conference that's kicking off in literally 2 hours. So, but we wanted to make time to do our roundtable this month. So we're here.
Thanks for
All right.
making time for me.
Yeah, I know. Normally we have more people. I saw a notification that some people joined last Wednesday. Like, why? But
Oh, weird.
anyway,
That's
so
weird.
yeah. So just for the recording, I'm Michelle Mitchell. I'm the CEO and founder here of Mitchell Consulting. And we have been in business for 14 years. And now we have a wonderful team that helps us with our small business clients to help them bridge the gap between their passions and their profits. So we are excited that you are here today. And our topic for this month is, let me introduce the team first. So Evan, Lauren, and Eric, if you guys want to introduce yourselves. Awesome.
I'm Evan. I'm the accounting supervisor here. Been with Mitchell Consulting for like 7 or 8 years now.
I'm Eric. I'm the one Evan supervises in accounting. And I've been here for 2 years now.
Howdy. Just kidding. I stole that from Eric.
Stealing my line.
I'm Lauren King Darden. I'm the business advisor, and I've been with Mitchell Consulting for 4 years.
Yay. And Sarah, since you're the only one here, could you please introduce yourself and tell us what you do and who you serve?
Yeah, my name is Sarah Shelb. I'm located in Kalamazoo, Michigan, and I am a creative brand marketing strategist. So I do everything from, what I like to do is come up with a game plan that will tell our client's story most effectively. And I am involved in everything throughout the ideation all the way through concepting and creation. And yeah, so that's a little bit about me and what I'm doing with my company right now.
All right, well, welcome. So if you need some marketing assistance, Sarah is here to help.
There's the resource.
Yeah,
There's the plug.
there you go. Since you're the only one here, I'll plug you. All right, so this month's topic is the synergy between mid-year reviews and CFO Days. And I coined the term CFO Days, I don't know, about 4 or 5 years ago, because clients were not taking the time to review their financials. So I like to explain that you are the CEO of your company, but you are also the CFO, even if you are outsourcing your day-to-day accounting process, you still get to make the decisions about what your business does. So setting aside time to review your financials and make strategic financial decisions is important. And I believe that you should set a time on your calendar and keep the meeting with yourself so that you are getting the financial things done. One of those times could be just meeting with Mitchell Consulting as well, so that we can help you make those decisions. So that's why we do CFO Days. But I will let the team take it from here. Welcome, Terry.
Hi, Terry. Oh, there she is. Okay. So, do we want Terry to quickly introduce herself, or you want to keep going?
Oh, she says she can't talk.
Oh, okay. Okay. So today we just kind of wanted to talk about the synergy between doing your CFO days and your mid-year review. Since it is July, the year is half over, if you can imagine. It's already hot season. And so since we're through 6 months, it's a really good time to reassess where you've been and like what your goals are, kind of see your progress on those goals, but then also decide how you're going to go about the rest of the year. And I know Mitchell Consulting, Evan, Michelle, and I have that meeting set next week, I believe, and we're going to be doing the same exact thing. So every business, no matter what you do, needs to have the information and like the cadence to do these mid-year reviews. But the best way to do that is to include the CFO day. So we're going to kind of get into that a little bit. So just a little on your mid-year review, you want to make sure that you're analyzing your financial performance. And I want to throw in there also, there's a lot of other metrics you can use. Obviously, we're an accounting company, we're a bookkeeping firm, and we believe that finances drive like 70-80% of what you're doing. um, or at least we believe that it should, and it's super, super important to understand your financial performance, track your expenses, and understand like what are you spending on and how is that driving your revenue. So when you're looking at your financial performance, looking at those things together, seeing how one drives the other is super important to making adjustments and reassessing your goals. So if you realize that your investment in certain things is not creating the revenues that you need, you kind of have to say, okay, something here isn't adding up. And when you are meticulous about going through your expenses to revenue and other metrics that you can use, it really helps you to adjust and align your future actions to ensure that you're kind of getting closer to the goals that you set at the beginning of the year. So we really want you to think about mid-year reviews from that level. There are macro and micro ways to look at things, but just ensuring that you are using your finances to reassess and get there, it's super important. And so that's when we then get to the CFO days. So mid-year reviews, it's really taking a step back and understanding where you need to go for the rest of the year. Going over the CFO days, like Michelle was saying before, you want to be consistent and you want to create an appointment on your calendar to take care of your finances month after month. So this is going to be the kind of the micro, where your mid-year review is a very macro perspective of your business. Your CFO days are going to be a micro perspective, where you're going to be paying bills, making sure you're managing your cash or whatever inflows, sending invoices. Like just take this day and dedicate it to all things finances, just because when you're not like, again, we're an accounting firm, we're in it all the time, but when you're not in it all the time, it's easy to forget to do certain things. Maybe not invoices, but maybe paying off your credit card or, you know, scheduling certain things. So we want this day to be full of all things finances. And you say something, Michelle?
Yes, I wanted to ask if um if the audience, if they know what they should be looking at, because I know a lot of times we say these things, but in practicality, do you actually know the things you should be looking at? So I would like to ask the question. If you have questions about that, I think this is a good point to discuss them.
Mhm.
I guess I would love to hear from you what should be covered during those days, and to give maybe to provide some context into what I've been doing recently. Every other week, I bill my hourly clients, so I set aside that Friday to send out invoices, and then I recently, and maybe this is more of my mid-year review type of work, I've broken down in a Excel spreadsheet all of my hourly rates and projects, line them up with how much time I spent, and then
Mhm.
next to that also um, listed out all of my project rate projects and how long those took me. And I made like a pie chart to identify what, because I'm in a marketing company, all of my services like vary slightly on expense and how much time they take. Um, so I did that to look at the pie chart and see like at what services am I providing where one, I'm making more money on and aren't taking as much time, because I'd really like to either identify how to increase the rate on my lower paying projects, or understand that they're just the projects that get clients in the door, like identifying if that's true or not.
Mhm.
And then looking at how I can continue to increase my rates, because I've recognized that's been an issue recently, and then just trying to identify, I guess, what I am interested in understanding is how do I create benchmarks for myself to be able to scale based on this data.
Yeah, those are all very good things you're doing, Sarah. Because when you first start out in business, a lot of times we do undercharge. We just flat out undercharge because we don't see how the client sees the value of what we do. But what you're doing right now is collecting information. And when you collect the financial information, how much you're charging people, how much time did it take you to deliver? So then you can calculate your gross profit margin. Those are all good things to be doing on your CFO day. That analysis piece, because it helps you make decisions about what you're going to do in the future. And because you're new, I would suggest that you raise your rates on every new client. Not Your rates are not set in stone. Every new client should get a new rate because you're learning more about the value that you're delivering to them, and you learn more about how you feel about doing that specific work, because eventually some things that you're doing now may fall off. So collecting that data and being consistent with your CFO days and taking a look at the data helps you make decisions and plan for the future. So like the mid-year review part of it is, okay, now in the next 90 days, what am I going to do different to change the numbers? Okay. So in that CFO day, yes, you're going to be taking a look at what you are doing, how much you're charging, how you feel about that, and where you want to take that in the future. So those are all very good things. Right now, you probably have some expenses for your clients, but you're just starting out. And I know a lot of times when you're in startup phase, you spend more money because the ROI of it is gonna come into play down the road. So it's okay to spend more money, and it's okay for your net profit not to be where you want it in the beginning because you're building. But we don't want to stay there, right? So you still need to take a look at that in your cash flow, which means how often is your money coming in to the business, and how often is it going out. So what I heard you say is that you bill your hourly clients every 2 weeks, which is great. But where I would like for you to get is that we would charge up front and then we deliver the work. That way you can predict how much it's going to cost you, but you're not there yet. So, but over the next 90 days or 120 days, next 6 months, you will be there where you can implement that, especially for a service-based business.
How do you feel about charging half upfront and then half upon delivery, or right before towards the end?
I'm all about us getting much cash in the door as soon as possible. So whether it's half or full or whatever it is, I'm okay with that. So the
Cool.
sooner you get cash, the better for your cash flow.
Yeah. Okay.
Yeah.
I feel like
But
I've seen
Go ahead.
service providers do, it's not even necessarily half, but what they take on as a retainer is their anticipated expenses for the service. So they know at least they're not going to be underwater while they're performing those services. So it's
Right.
kind of nice to build
Yeah.
yourself a little buffer so that regular other business operations can continue. And then once it's finished, you have what feels more like just revenue coming in. You've already covered all of your expenses.
Yeah, exactly. I see Terry has a question she put in chat. I don't have individual clients. I deliver online products, so I need to sort out how to track, how to track, and how I am using my time. Absolutely. As I um, build and deliver revenue generating activities. Yes. So Terry, it is going to be important for you to track your time. There are a few tools. One is Toggle
Super
that
free.
helps you, which is free, helps you track your time. I would suggest using Toggle. TOGGL is Toggle. T is in Tom, OGGL.com. And they have a free version that you can use to track your time. You can also, what do you call it when you put the app on your browser? You put the app on your browser and it's more easily, like you can access it more easily.
Oh, the extension.
The extension, right? The extension on your browser, and you can more easily track what you're doing. I would suggest that. There are other things like Harvest, and there's so many. Clockify, even like Gusto and QuickBooks, they both have time tracking, time trackers. So I would just get one, use one that's free, because why do you need to pay for it if you don't have to? It's just you, right? But when you start building a team, you might have to pay for a time tracker. But what that does is it gives you data on where you're spending your time. So when you begin to develop the pricing for your digital products, you know how to price it because you know what went into it. Yes, we like Toggle. That's good. Well, thanks for trusting us, Terry.
I know.
Yes, I was looking at Toggle the other day, and I'm like, should we switch to Toggle?
I tried to tell you.
I know Lauren's been preaching Toggle for the last several. So, but these are some of the things that you can do on your CFO days because they impact your financials. And making these decisions does have an impact on your finances. So
I think it's really important to be tracking something like that on this consistent of a basis too, because I feel like oftentimes people look back at the less objective thing, like they spend their small CFO amounts of time doing like just paying bills and looking at their cash flow, which is obviously important, but I think that it's really having this consistency, and I wanted to like commend Sarah on doing that too, is like if you're doing it this frequently, you also have an idea of how the last month of business felt. So like not only do you have these like hard numbers around like how financially like the efficacy of your business, but also you can look back and say, okay, this past month felt like really intense and very stressful. And I know that that's not a sustainable model for myself. So you can sort of have it weigh into your future goals in that way of knowing like what you can start to sort of learn and understand what your capacity is as a business owner. And then sort of weigh that against how you're doing financially to make decisions.
Exactly. And then Terry said, I've had so much money going out as I build this business. I need to be bringing in revenue ASAP. Yes, that is true a lot of time, but you need to evaluate what you've spent your finances on and seeing whether or not you're getting that return in the next 90 days. So that's what you want to see. So yes, I invested, but what is my return? Is my return gonna come over time? You know, is the time frame 90 days, which is a quarter, or is it longer? Is it more like 6 months or next year that I will see an impact on my revenue because I invested these dollars into the business? So that's what you need to be paying attention to, Terry. Okay.
Okay. So this is just kind of hammering in what we've already talked about, but your CFO days are super important and they're all connected. So as we talk about right now, mid-year, looking at the big picture and figuring out how we're going to move forward. Your CFO days, if when they're not done, it makes this time of year so much harder. It's similar to taxes. If you're taking care of your bookkeeping month over month over month over month, taxes aren't as daunting because everything's already done. So if you handle your CFO days like consistently, as we're saying, and that every 2 weeks there is perfect. But some people you can do monthly, you can do weekly. It really depends on how much cash activity you have, how much business activity you have, but figuring out whatever that cadence is, keeping up with it and doing it is going to help you so much more to say, okay, I'm halfway through the year, even if you might do quarterly, I'm a quarter through the year. These two really need to work together. So it's super important that you are being very consistent with this. And so we just wanted to give you a couple of things to prep for it and a little gift too. So prep steps are, of course, Mitchell Consulting. You want complete and accurate bookkeeping. And when I say complete and accurate, it's two different things. Complete means that everything is included. And so you need to be doing reconciliations and making sure that you're using third-party information to match to your bookkeeping software, whatever you use. We use QuickBooks, and that will ensure that when you're looking at a report, it's all there. Like you want to make sure it's all there because if you're making decisions off of incomplete information, it's not going to be helpful. Literally, accounting firms do this. Like this is what they do on a huge scale. So no matter what size your business is, having things to be complete and accurate is important. You also want to start thinking about what the business metrics are that matter to you. So there are a plethora of ratios that you can use, but if it doesn't really apply to your business, it's just numbers in the wind. It doesn't matter. So when you're looking through business metrics, if you need to know like what they are, our team is here to help if you have any questions, but those metrics will, when you're looking at it over a period of time, will tell you really, really key information to help you move for the next step. And all of this is really to help you make the best decisions possible. And then I want you to consider the following. So using a checklist every single time so that you're doing the same thing every single CFO day. The checklist will keep you consistent and then it'll help you to have that data over time to make better decisions. Also, prepare to adjust mentally because sometimes we get really we get a one-track mind. We've put a lot into what we're doing. We're putting ourselves out there by delivering our services. And when you get knocked off of the plan that you had in your head, sometimes that is really difficult to make swift decisions. I am a culprit of not making swift enough decisions, and it costs cash money. So prepare your mindset to be very flexible and don't get too don't get that one track mind where you're not able to, you might get down on yourself if you have to change the course. I mean, it's kind of a normal thing. So just prepare yourself to adjust your resources or your budgets based on your ongoing performance. Anything else, guys, on that?
Do you typically recommend different metrics based on the business?
Yeah, for sure.
Mhm.
And I'm trying to think off the top of my head would be a good one for yours. Michelle?
I think right now, like this is a non-traditional metric for Sarah. How do you feel about the service you provided? Like each line item of the service? Because right now you're trying to decide which services do I want to deliver. So how do I feel? So it could be a smiley face, a straight face, or a frowny face. It could be that simple,
Mhm.
and that's not a typical metric, right? But it's the right metric for you.
Mhm.
A typical metric would be gross profit margin by service line item. That's a typical gross profit margin. That's a typical metric. Um, maybe it's your receivable days. How many days outstanding are your receivables? Because you're billing hourly But then also, how much time is it taking you to follow up and track that hourly bill? Is that in your billing? No, is it? I'm pretty sure most people don't put that because it's the follow up. Like, in order to, when you're submitting invoices to be paid and people don't pay them when they're supposed to, it takes your time to
Mhm.
follow up. That's not being reflected in what you're charging them. So that could
The
be a
late
metric
fees.
too. So does that help? Yeah.
And it can also like create this, it can put you in a bad spot because if you're
Mm-hmm.
paying people, when you're by
Mm-hmm.
yourself, a lit invoice is a
Mm-hmm.
lot less impact than when you're paying other
Mm-hmm.
people because you can get caught in the lurch. So knowing this stuff ahead of time and then being able to implement it as you grow your team and business is just it'll be it'll pay for itself, like the time you spend on it. Um, Another metric I would look at is like a lot of lead generation stuff, I would say, especially
Mm-hmm.
um for
For
that, like,
Terry, for sure.
something Terry said. She said, I love to
Mm-hmm.
know suggestions to find metrics for online businesses like mine. I look at cost per lead for my ad spend, could look at unsubscribe rates for my emailers. I'm sure there are others. So Terry basically has like a an online business where she's doing a lot of email interaction and like self-help, not self-help, but she's like helping people get through things through using like email sequences. And so those
Mm-hmm.
email sequences will guide her clients through different steps to help them with their things that they're dealing with as caretakers of Parkinson or people with Parkinson's. So for her, it's not necessarily like Sarah, where it's like I'm giving hourly time and I'm get like, I'm helping this client hourly. So her pricing that it's like it's a evergreen type of thing. It's always going to continue
Mm-hmm.
to create money for her. But, she's like, well, how do I know? And like Michelle said earlier, when you're time tracking what it takes to create that
Mm-hmm.
thing, that will help you to understand, even if it's a residual impact, which is ideal. Like I'm gonna tell you, residual income is nice, but
Yeah.
getting people to that thing is some of the metrics you would probably want to look at, Terry. So your cost per lead makes a lot of sense looking at that, but also there are a couple other like revenue, not revenue, marketing
Mm-hmm.
metrics
Churn
that you can assess.
and like churn rate. I can't remember if Terry has a membership.
Mm-mm,
Not yet, just a
not
course.
yet.
Okay. Um,
Mm-hmm.
okay. Churn. I mentioned churn rate, but it's also for Sarah too. What the churn rate is telling you how, like when people fall off of their payment. So for Sarah, maybe yours is LTV, lifetime value of a client, how long you're keeping that client over time. For Terry, um, how long, like, do people stay engaged in your email list type of thing?
Mhm.
Would be, if you don't get many unsubscribes, or, you know, if you make an or if you make a new offer, how many people convert to the new offer? You know, that percentage, that conversion percentage is good, whether it's done with your like internal email marketing, or like from cold. So a lot of times in the online space, a lot of people talk about how many new leads they got, but how many of the leads you already have turned into new clients,
Mm.
turned into paying clients. Yeah, so that's a more effective rate to me, because they've stayed on your email list for a while, and now you're able to make an offer for something, and how many people from your email list took the offer. So if that's more effective, if that percentage conversion is more effective for you than cold lead to offer, then maybe you need to focus on like the email list and really um, nurturing those people, because your percentage is higher.
Because those are basically your future clients because they're
Yes,
so
exactly.
loyal to
Because
your
there's
content.
yeah, absolutely.
Mhm.
Yes.
Yeah. I feel like we're digging into Sarah's expertise right now a little.
Yeah, a little bit.
I think for physical products too, it's worth it to be paying attention to like the average order amount that each
Mhm.
customer is willing to pay. Because you can start to see trends where, okay, I'm noticing that there's kind of a threshold or like a ceiling where customers are willing to spend. So if you have that data, then you know, okay, maybe I need to be focusing on less time intensive, lower cost things and worry about volume more so than thinking about like really long in-depth products that take a lot of your time that maybe most people aren't going to have the funds to actually like spend on.
Yeah.
Mm.
And the order bump, right? When you have a digital product, having that order bump increases the average order, but you got to
Mhm.
have something to offer them to do the order bump, you know?
Yeah.
And a lot of
So
times it doesn't take a lot to increase that average order rate, right?
Mhm.
These are all very
any
good questions.
any other questions, guys? Nope. Well, we have a gift for you today. I would love for you to use our little QR code, and it'll take you to a good starting place checklist for your CFO day. It's something that is in one of our courses when we talk about CFO days, but we just want to share it with you for this one time if you're on a call with us so that you have that checklist. And you can really help it to guide you. You can build it out. You can add things specific to your business, but it's a good starting point of how to consistently do your CFO days so that it'll bring you impact in the future when you're doing a different type of reviews over time.
I would also go back to this recording and pull out the pieces that we discussed today.
Thank you.
You're welcome.
You're welcome. And also for all of you watching.
Thank you, Terry.
Oh, what did Terry say?
Terry
Oh, very
clap.
helpful.
Yay.
Oh,
If you could give us a review about our roundtable, that would be awesome.
that'd be awesome. And for our maybe after viewers, if you're watching the replay and you'd like to book a
Yes.
call with Financial Consulting, we are here to help. So feel free to book a call. And it's been lovely serving you guys on Roundtable today. And I think close out.
Oh,
Oh my gosh, Eric,
Eric has it.
how did you do that?
It's called I updated my Zoom. Have all the fancy features.
Did you do it from your hand?
Oh, that'd be cool if I could just be like, and then it does it. But no, I did it from the React little dude.
Um,
So
Oh,
it's like anytime Evan says something, I just do ready.
thank you, Zoom, for
Yes.
updating and
right.
entertaining.
Yeah.
It's the little things.
Yeah.
Awesome. Terry, you'll get a you guys will get a survey after this too. Give us
Yeah.
feedback on
And
Roundtable.
Lawrence, Terry would also like the slides.
Oh, sure, no problem.
Yeah.
Before I change them up, let me print it out. Awesome. Okay, well, thank you guys for joining us today. You want to close out, Michelle?
Yeah. Thank you guys for joining us. I really appreciate you taking the time. The more you show up for yourself, like the better you will get. That's what I know for sure. So I really do appreciate you taking time out to attend Roundtable. And if you have any other um, entrepreneur friends, like invite them, tell them, like, because we try to give thoughtful information that you can actually implement, and because we want to make an impact on your life and help you have the best business you can have. So we really appreciate you being here. So thank you.